Hello, nice to meet you. I'm Kim Gi-hyun from Richgo. Since it's a new year, I want to talk a bit about loans today. So, I'll be sharing some information related to loans. Now, as you can see, major banks are planning to lower the threshold for household loans that they have tightened until now. They are also increasing the limits for mortgage loans aimed at stabilizing living conditions and are resuming non-face-to-face loans that were previously suspended. For example, KB Kookmin Bank is considering raising or even eliminating the limit for mortgage loans aimed at living stability from 200 million won. They are reviewing loan insurance. Shinhan Bank will double the loan limit for stability to 200 million won, applications accepted via brokers. Next, they will also resume the application of mortgage insurance. Next, we will also accept loan applications through loan recruiters. This is what they are currently doing. Hana Bank resumes mortgage and John's loans. Woori Bank resumes mortgage loans, limit to 200 million won. NH Nonghyup resumes 4 personal loans. Woori Bank is also planning to increase the limit for mortgage loans aimed at living stability from 100 million won to 200 million won, and they will resume the application of mortgage insurance as well as the sale of non-face-to-face household loans. And NH Nonghyup Bank is also said to be resuming sales of 4 non-face-to-face credit loan products for office workers. They say conditional mortgage loans are also allowed. Since last fall, the threshold for loans has been lowered a bit, and they are looking to make it even more favorable. So overall, there's a general easing of loan restrictions happening. The problem, however, is that the burden of interest is increasing. Many people have been saying that in early 2024, and even recently, that real estate prices will go up because interest rates are falling. It's a constant gaslighting, the same old line. Prices will go up because interest rates are falling. They lowered the base rate, so prices will rise. But do you know what's really surprising about this? Let me explain as I look at the data. Do you see this? Here, the orange line represents South Korea's base interest rate. Next, the blue line represents the United States base interest rate. Let's take a look at this recently. Do you see it? So, South Korea's base interest rate started to drop after September. The US has also started to drop. So, what are they saying? The base interest rate for mortgage loans is going to drop. But look, the base interest rate has dropped and the US base interest rate has also dropped. But what happened to mortgage loans in South Korea? In fact, it has gone up. Mortgage loans have gone up, so it's moving completely in the opposite direction of the base interest rate. So, just because the base interest rate falls, doesn't necessarily mean that the housing loan interest rate will fall. I really don't think you should think that way. And let me tell you, even if mortgage loan rates drop, that doesn't necessarily mean that real estate prices will rise and lead to an increase. I've mentioned several times based on data that this is completely wrong. So what are they saying now? Right now, the restrictions on loans have been lifted, but the burden of interest has actually increased after the rate cuts. It's increased. So why have mortgage loan rates actually gone up? That's exactly it. The US Treasury bond rates surged, which is causing the domestic loan rates to be determined based on the rising bank bond rates. That's why, everyone, the decrease in South Korea's government bond rates is much more important than the base interest rate, right? I think it's right to look at how US Treasury bond rates are moving and then predict how mortgage loan rates will move. And now, if you look here, I mentioned earlier that I was explaining using the data from our Richgo expert version, but you can also see it in the newspaper. So how are Woori Bank, Shinhan Kookmin, and Hana doing right now? Mortgage loan rates are all going up right now, right? As you can see, the mortgage loan rates have increased by about 0.1 to 0.2 in just the last 10 days. I think you can look at it this way, and the reason for that is the US 10-year Treasury bond rate. It's really strange, because even though the US has lowered the base interest rate, the Treasury bond rates are actually going up. So we're seeing a very unusual movement lately where market interest rates and the base interest rate are moving completely in opposite directions. Mortgage rates linked to US. To understand the direction of mortgage loan rates, it's good to look at the movements of US Treasury bond rates. And some experts say that since interest rates are being lowered, the burden of loan interest decreases, which leads to an increase in apartment prices. This is the very simple logic. It sounds very plausible at first glance, but it's good to keep in mind that the world often doesn't work that way. And as for credit loans, the threshold is still quite high. So, some secured loans have a bit more stability, so they might loosen up a bit. But what about unsecured loans? There's a high risk of default. Banks are cautious with credit loans due to high default risk, rapid growth risk, stability. Kookmin and Shinhan. If credit loans are rapidly increased, it could significantly hinder the bank's ability to maintain soundness and expand shareholder returns. So if you look at the availability of non-face-to-face loans by bank, you can see that Kookmin Bank and Shinhan Bank offer all types of loans, including mortgage loans, Johns loans, and credit loans. However, for Hana Bank and Woori Bank, credit loans are currently not available at both banks. So, for non-face-to-face credit loans, it's still a bit challenging. Therefore, it seems that the threshold for credit loans remains relatively high. That's why threshold for credit loans is still quite high. I think you can look at it this way. So banks are already planning to supply more loans this year and they will be able to borrow more funds, right? That's how interest rates are. As government bond rates are rising, even though the base interest rate has dropped, we're seeing a phenomenon where loan interest rates are actually increasing. This means that the burden on borrowers has grown even more. And if the US government bond rates continue to rise, there's a high possibility that domestic loan rates will also increase further. I've been saying this repeatedly. Expecting a return to the low interest era could lead to big problems and potential harm. It's very hard to go back to that world. You'll get hurt. I've repeatedly said that it's very hard to go back to that kind of world. That's why I think it would be good to take a close look at these parts and refer to them while looking at the government bond interest rate data. That's why you need to carefully review your loan situation and interest rate fluctuations. And the world is going to be like this for the next 5, 10, 20 years. Because for your mortgage, you have to be a member for 30 or 40 years. That's why you need to take out these loans after anticipating how the world will change in the next 10, 20, or 30 years. Very few people actually get fixed rate loans for 30 or 40 years. Usually the longest you might see is around 5 years. So you really need to imagine how the world will change after that period. Given the various issues like climate change and increasing conflicts between countries, it's clear that prices are likely to rise. We're heading into an era of inflation. And what does that mean? It means that inflation is inevitable. The US government bond rates are bound to rise in the medium to long term. So while mortgage rates are currently below 4% in 5, 10, or even 20 years, they could very well be 6%, 8%, or even 10%. That's a real possibility. What do you all think about that? If the rate I'm currently getting at around 4% goes up to 6%, 8%, what happens then? It could really lead to a big problem. Everyone, that's why it's really important to be cautious about loans. So what does that mean? The world is extremely unstable right now, and we don't know how things will turn out or where they might go. That's why it's crucial to buy things at a low price. It's really important to focus on getting the best deals. Yes, because the world is so unstable and we don't know how or where to go right now. Buying things cheaply is extremely important, really crucial. That's the key point. And in 2025, there will finally be good opportunities to buy real estate in Korea at lower prices. I'm planning to actively help those who can buy their own homes or invest in real estate at a lower cost. So I'm really looking forward to making the most of 2025. That's all for today's broadcast. The new year has just begun. I encourage all of you to keep moving forward each day with strong goals and resolutions for the new year. Thank you.